Hi guys, this is HTrade and I'm a partner trader of Wesley Trades HQ. Alright, so basically recently the boss Wes himself has produced a video that explains to you how to get started in trading in 2026. I would highly recommend that you guys watch this video to get started, to get an idea on what is trading and to mentally prepare yourself on how to get started. So this is just a basic introduction on how to get started in trading. It doesn't explain to you what is a strategy. It doesn't give you a strategy in this video because that's already also in a different video. So if I just go to the Discord, there's a different video on how to explain what is the strategy that we actually trade. So basically, number one, this is a getting started guide on how to prepare yourself mentally to get started into trading. Now, this video explains to you what is the actual strategy that we are trading. So yeah, I really hope you guys go and watch this video. It is in the Discord and it's on the Wesley Trades the YouTube channel as well. And also, I would like to ask you guys if you can please like and subscribe on my channel. I'd really appreciate it. So I'm slowly growing my account, but more importantly, this is still my own trading journey. This is my own trading journey, my own trading journal, etc., etc. So yeah, I really hope you guys would like to subscribe and like my videos. Thank you so much. All right, so now let's get started on what I actually wanted to do. I would actually like to show you guys something. I would like to show you yesterday's trade. So currently I'm in a New York trade right now as we are sitting here right now. And it is in drawdown at this moment, but it's fine. It's not the end of the world, right? I can see that the 15-minute time frame actually just started turning bullish, but the moment that I entered the trade, the 15-minute time frame was bearish, right? So I am going to stick with the higher time frame direction. Yeah, but at the end of the day, let's just quickly go back to yesterday's trades. I would like to quickly go through yesterday's trades, which is absolutely amazing. So let's just quickly go to replay. Okay, quickly click on replay. All right. Oh, I can't use replay at this point. Okay, I need to renew my TradingView account, right? So that's fine. I'm going to renew it the moment that my the moment from the 1st of January, because my current replay, my current license expired on the 27th of December. So, but at the end of the day, I want to get the renewal date as from the beginning of the month as possible, because that's when the payments go off from the beginning of the year. That's from the beginning of each month. That's what I'm trying to aim now with this move. All right, so what I would like to do is just show you yesterday's move, right? Yesterday's London trade was absolutely insane because we were bearish at that point in time. And we just kept on being bearish, basically, because the 15-minute time frame was bearish. Here we printed a bullish fair value gap, but we started closing below it. So it turned us into an inverted fair value gap, and could have taken a nice sell trade there. But at the end of the day, let me just quickly show you the trade from yesterday on the 15-minute time frame, right? So during New York time frame, the 15-minute direction was still bearish at that point in time. And if we go to the daily time frame, let me show you the daily chart. What did we do last week? We took out a weekly high. Yeah, with this move. We took out a weekly high, turning point, and we started having a reaction from that move. If we go down to daily, what did we tap? We tapped a bearish daily fair value gap, right? And then this is what happened yesterday. We started having a reaction from the tap of that move. So remember, this is the weekly and the daily time frame. It takes time for this move to go into realization because this is the higher time frame, right? So now let's go down to the 4-hour time frame. So at that point in time, the daily fair value gap was still bullish and we haven't closed below it yet, right? But what we actually did have so far is I marked out the previous day high, which was there at that point in time, and the previous day low was around here, basically. So we basically just blasted through the previous daily low. That's what happened. We just went through it. We just went through it and we didn't look back. Because, like I said, what did we do the previous week? We took out a weekly high turning point. That is a very high time frame confluence. And we tapped into a daily bearish fair value gap. And what happened in between? So the 4-hour time frame started turning bearish. Bearish. And then there is also a bullish fair value gap here on the 4-hour time frame. And we started turning bearish here as well. So So I thought to myself, okay, cool. We are bearish, right? We are bearish on the higher time frame. We are bearish on the daily time frame. We are bearish on the 4-hour time frame. So what I did was I just went to the 1-minute time frame. New York Open came. I was not. I mean, what happened during New York Open is we didn't even take the London session low, right? We actually just started going up. And we had a CE tap here as clear as day, which is the middle of that fair value gap there. And we started going up. What happened after that? We tapped into this inverted fair value gap. We tapped into this 4-hour inverted fair value gap. That's what we did. And then came 10 a.m. What happened? This 4-hour candle started closing below. You see this the 6 a.m. 4-hour candle here. It closed below that 4-hour fair value gap. We actually retested that inverted fair value gap and we started going down. That's why I waited very, very patiently. And I was looking for a sell. We had, with this first move up during New York time frame, we took out the London session high. Great. Not only that, if you take your Fib tool, your Fibonacci tool, and you draw it from this Asian high to this London low, where did we retrace into? So step number 1, we took liquidity from the London high, right? During New York Open. Step number 2, or confluence number 2 for a sell is, what is the retracement that we have right now on the Fibonacci tool? From what I've drawn just now, a 61.8% level retracement. And take a look at this rejection from the 61.8% level, right? Price started going down. We printed a bearish fair value gap there. We tapped into this daily fair value, fair value gap here on the 1-minute time frame. We printed a bearish candle and I was in for a sell. I took my stop loss here and I went out as this candle moved here. And let me show you this trade that was absolutely beautiful. This is the entry, exactly what I've spoken just now. See, that was a legitimate entry. And as you can see, I exited as that candle moved. And I went out of the trade. Exactly as I explained. We took out the London high. There's a 4-hour inverted fair value gap that we tapped. We closed below it. And the previous daily low actually wasn't the London low haven't been taken out yet. So these are all very nice bearish confluences. And yeah, I made some money there. And then as price moved on and on and on, the 1 minute time frame started turning bullish. But like I said, I wasn't interested in any buys whatsoever. And what happened again? We reacted from this fair value gap once again. Why? Because we are still bearish. And what are we tapping into? We're still tapping into this 4-hourly inverted fair value gap. Because like I explained, at 10 a.m., the start of 10 a.m., where are we? We are below this 4-hour inverted fair value gap. We tapped it once again. And I started selling again the moment that candle closed. Because that is still a legitimate CE entry. And I took my stop loss again to the same stop loss that I had on this trade. And as you can see, what happened. So I just patiently also saw that the 1 minute time frame also started turning bearish here, which is amazing. But I entered prematurely off that CE tap. I should actually not have. I should have waited for the 1 minute time frame to turn bearish first. But this was a legitimately good trade because we are tapping a higher time frame confluence. And we're trading from the 1 minute time frame, but we're having our reaction from the 1 hour from the higher time frame confluence. I entered this trade and I took my take profits as this move happened. Let me show you this. There we go. Went into the trade legitimately. There we go. And I exited my trade as this move started happening. Boom. Beautiful trade. And then I ended off with a beautiful balance. Yes, I'm currently in drawdown, but I'm taking it step by step to get it out of the drawdown. All I'm doing is I'm following my strategy. That's all. I'm just following my strategy. And I'm not going to use my emotions in this. At the end of the day, just follow the strategy. Make sure that you're on the right side of the higher time frame confluence. And wait for the lower time frame confluences to align with higher time frame direction, and that is it. So yeah, that's how I caught these two beautiful trades yesterday. So let's take a look at the trade that we're currently in. I'm a little bit worried about this trade, but I'm not too worried because where's the higher time frame confluence here? There we go. During the Asian time frame, we tapped this inverted fair value gap again. Not only that, take a look at this. Take a look at this. So, like, remember when I explained that yesterday was the daily time frame was actually bullish because we printed a bullish daily fair value gap. Even though we responded from this daily bearish fair value gap at the top, we went into this daily. This was a normal daily fair value gap yesterday, right? So at this point in time, with this move up, we were still bullish on the daily time frame, right? But after yesterday, what did we do? We closed below this daily fair value gap. What is this now? This is a daily inverted fair value gap. What does that mean? It means in my strategy that I have for myself, this means that the daily time frame is currently bearish. We took out the weekly high last week, right? We're having a response from a bearish daily fair value gap here, right? What is the 4-hour time frame right now at this point in time? We have a bullish 4-hour inverted fair value gap that turned a bullish 4-hour fair value gap that turned bearish after we closed below it, right? We have a very small 4-hour fair value gap, bearish fair value gap here, but this is a bearish confluence. We also started closing below these 4-hour bullish fair value gaps. So when we close below it, immediately What is the 4-hour time frame here? Bearish. That's it. That's it. That's literally it. So what happened during the previous 4-hour candle? Let me ask you this. What happened during the previous 4-hour candle? We tapped this 4-hour inverted fair value gap again. And what is the external confluence? So if we trade from internal to external, what is the most logical external target for this trade? Internal to external, which is the previous daily low. And that is what my aim is with this London trade. The only downside is, the only thing that I did prematurely is I entered this trade prematurely based on this 15-minute structure before this even happened, right? Before this even happened. So I based my trade entry on, I can see, okay, cool. We are now bearish on the 15-minute time frame. Here is a 15-minute inverted fair value gap. And to be honest with you, here is another one. Right? We close below it. And as you can see, at that point in time, if we literally do this, right? If this wasn't the time that I was trading, right? What would you see? The 15-minute time frame is bearish. You see that? Bearish. And then what happened after that? London open. What did we do? We had 15 minutes sell can of fair value gaps, and then we started closing below. Started closing above it. Unfortunately for me, I am still in this trade. I'm not going to give up on this trade. But at the end of the day, it means that if it's going to hit my stop loss, so be it. Because at that point in time, the 15-minute time frame was still bearish. At this point in time, with this move down, it was still bearish. But unfortunately for me, remember, the market can still do what it wants, right? So the market started turning bullish here. That's what this move is doing. What is the only what is the good confluence that I have with this sell trade? That I'm trading with the higher time frame confluence, which is the 4-hour inverted fair value gap here from the top. And there's a possibility that we can start turning bearish here. But at the end of the day, like I said, it doesn't help you try to predict the market. You have to follow, when you do a trade, you go with the current structure. And at the end of the day, when I entered this trade, right there, you see, I went with this bearish structure. We closed below this, and we started turning bearish here. So that's my reasoning behind this trade, because 15-minute time frame was still bearish at that point in time. So according to my strategy, it was a legitimate entry for that trade. The only thing, though, is, like I mentioned, now the market almost started turning bullish here after closing above these bearish 15-minute fair value gaps. So now these are bullish. Unfortunately, it is what it is. I can't do anything about it. The market's going to do whatever it wants. But I will make another video later on to explain how this trade went. Obviously, the market's going to do what it wants, like I said. And I'm going to try my best to follow with the higher time frame confluences. But, I mean, losses are part of trading at the end of the day as well. This is something that you guys need to understand. Losses are part of trading. So when I hit this loss, no problems. I'll move on to what? The next session. Because I have split my risk up into 2 trades. This is trade number 1 for the day, right? And trade number 2 is going to be during New York session. So yeah, there we go. That's it. Any case, thank you so much for watching this video. Like I said, I really hope you guys like and subscribe my videos. I really appreciate that. That helps me a lot. And like I said, this is my trading journey, my trading journal. And this is basically, I'm just a normal guy. I'm just one guy, right? I'm not trading for an institution. I'm just trading for myself. This is just me trying to survive in the trading space, basically, at the end of the day. And with prop firms, it is 100% possible to make a living out of trading if you just keep on following your strategy that you want to trade with. So yeah, just keep on doing what you need to do. That's it. That's all you do. Any case, thank you so much for watching. And oh yeah, one thing I need to mention is, um, I have my fib tool drawn from this New York high to this New York low from yesterday, and there was a 61.8% fib retracement here. So that's also why I also went into this trade. I always tried to look for fib retracements the best that I could, and this was a good 61.8% fib retracement. So that's also one of the confluences I used before I went into this trade at that specific point in time. So yeah. In any case, let's see how this trade goes. I mean, anything can happen. But yeah, so like I said, the market can still do what it wants. And if we hit stop loss, so be it. Losses are part of trading, and you need to accept that. That's it. You need to accept it, and you need to keep a good mind at the end of the day, because um, your money management is going to decide how well you make your profits in trading at the end of the day. So yes. All right. Hope you have a great day. So I'll check you guys later. Right. Cheers.